Yo, so boys, today we're going over a little market review on gold. There's not really much I actually want to go over apart from just some of the price action and what it's actually doing. These videos are basically mainly for me to look back at. This is a different form of back testing that's very effective over the long range. So what I'm actually looking at on gold at the minute is we have a couple areas marked out. I've got the sessions marked out on the 30 minutes pinpointed chart. So just looking at this, we can tell that gold has ranged for a while. I'm just going to simply put some rectangles around here in red. So we have the range here, we have the main drop from the range, which took out the liquidity inside of that range. Let's put that as purple. We have inside of this, we have a, let's go with green, we have some consolidation before why is my hair looking like that, bro? It's too early in the morning, man. It's too early in the morning, man. But yeah, so right, let's get back into it, boys. Okay, that looks more presentable. Not that it's very presentable anyway. So yeah, so what do we have here? So we have consolidation before the push up. So the push up here, which then took out the liquidity of the previous down move. So let's have that as blue. Then we have more consolidation coming in here, and more range coming in here, and then let's have this as red. So what does this actually mean? So this means that gold was accumulating orders over the long range, readying for it to be taken out and areas below to be swept. So the only thing with this is that this low was not actually taken out. And if we're looking at it so that's the, actually let's keep this day in mind as well. Keep this day in mind. So yeah, what we had here was we had the highs of Asia. So we had the highs of Asia, they did not get broke. We then had the lows of London, which were broke very slightly. So actually no, the low is here, which was then immediately broke as soon as, where's half on, let's look on the smaller time frame. So yeah, what do we have here? We have the lows being swept immediately, very fine, but it still counts. Doesn't matter by how much, it still counts. So yeah, so we have those lows. Let's take that out. Oh no, I'm not going to get it off, am I? There we go. So we have the lows being swept. This is the new low for the New York session. And then the consolidation range starts at the New York session from the large push up. So the push up was from here. We had then the range before the drop. Now if we're looking at this to take trades off of this, what you would want to do is you'd want to go off of specific time frames. So maybe you're looking at this New York session, it sweeps London lows. You could have entered on maybe a break here, aiming for this high, keeping your risk low, going for a nice 2R simple trade. That would have been a nice take profit. Let's go down a bit lower, get ourselves across to this area. Let's actually take, am I going to be able to take this off? Yeah, I am. Okay, so now we're inside of this range. What are we looking at? So we've seen the push up, we've seen a couple of sessions have played out. What are we actually looking for? So let's go through London from this push up from the previous New York session. So we have the Asia high, you want to make sure you mark it out on the 30-minute or the 15. Prefer the 30-minute because it gives nicer candles. But yeah, so we're here. You see the, I don't know why that was put there. But yeah, so we had that these areas were swept as soon as market came out. We saw a break of structure here. You could have entered your trade, placed your stops underneath because you want to account for slippage. You would have then placed your take profit at the previous high of the previous session, and you would have been in a little bit of drawdown. If we can go on to the 3-minute chart, might show us a bit better how much drawdown you would have been in. So if you were targeting, so we say it broke through, comes up, creates the high, pushes back down, breaks it, so you would have then entered there. You would have then had your stops under the liquidity, and that was a lucky trade. That was a very lucky trade. But yeah, it still would have worked out. It would have been completely fine. I don't really care about drawdown because we're always playing towards the rules that we set for ourselves. So we only risk 1%. So it doesn't matter if we're in drawdown 1%. It doesn't matter if we're in drawdown 0.98%. It's fine. And then the trade then pushes up, spikes out. We would have, I mean, sometimes I take partials. Normally when I'm trading gold, I would not take partials because I like the whole of my position to run. But in this instance, I think we would have taken partials because of the retracement further down below the low of the break. I would have been like, okay, well, I want to manage my risk, so we would have taken first profits here, and then it would have just gone up to keep sweeping. You could always leave your positions in, but when I'm trading between time zones and different sessions, I like to get my trades in and out. I'd like to get out before the next time frame of movement. So yeah, that would have been a trade within the within the London session, trading into New York. Now what do we see next? We see a range. We see some consolidation before the New York session open. So New York pre-market consolidation, London, the money has left the market. Obviously there is money still inside of the market, but you know what I mean. The money is still moving, but there is no large orders that are going to be pushing price in a certain direction. Now as soon as market opens, what does it do? Breaks above the high of London. Let's get that back to blue. It breaks above this high. What does that mean? That means that we are now looking to place a sell. You could definitely have wait, where was the high? Here. Let's get back across. So what would we have looked to do now? We would see, let's take this range out because we just need to know that it's there. We don't need to really care about it. So what do we see? We see price obviously ranging, New York open, pushes straight up into it. The only issue with this sort of thing is that when market opens, if it pushes into it straight away, you don't know if it's actually just going to wait or if it's going to be pushed up. So you want to be able to manage your risk, definitely with this. So what you would have done is you would have waited for a nice little break. So here, I would have watched this. I would have seen, okay, what's it going to do? If it's going to come back up, I will place a trade. If it breaks again, I'll place the trade. So we're now in here. We would have then placed the stop here. We would have gone for the low of London, which is there, and that would have been a 2.1. You could definitely have your stops above here. for a 1.3, which is completely fine because it would be the same trading day, so you would obviously have already made 2.8%, or depending on what your risk is. So that would still be fine, lovely to manage your risk, but you have absolutely zero drawdown. You would then have taken partials at this point, moved your stops to break even, obviously. Actually, that's a little bit wrong. And then obviously your full take profit would be here. So this is how you trade different time zones with the trend. What do we see now? We see price spike down, create a low within the New York session, within pretty much instantly. Price pushes up pretty rapidly. It breaks above. Does it break above that? I can't really. Okay, so it does break above that, which means that we want to see some bearish action. What it does now is consolidates. That's what I said it was doing. But because it broke, it created a demand level, and that could be refined down. Oh, this is going to take. Okay. So I don't know if I actually took this trade. Right. So we have the formed demand level of the 15-minute. Okay, so the demand level is here. What you can see now is that price actually taps into that, and if you did take this trade, you would have seen a 4.7. Now this is a very, very, very clean trade. You could have waited for a push into it, wait for it to push out of that demand level to give yourself another area of confluence, and then wait for price to push up, break structure, and then I'm gonna sneeze. Jesus. Yeah, you could have waited for price to come down, come up a bit, break structure, so it gives you a little bit more confirmation, and then you would have had absolutely zero drawdown. That's something people like to do, especially when trading inside of these sessions, because price can move pretty rapidly. So yeah, so what it did was hit previous New York demand from the Asian push. Asian retracement, so Asia pushed the market down into the London money, which then was picked up in London and taken out. So then we can see that we would have had, I mean, it doesn't actually show many levels for take profits here, not any specific ones, but you could probably target here for your first take profit, and then you would have had a clean. If you're doing it like that, you would have had a clean 1-to-1, which is exactly what we want to see. You want to take whatever you're risking first of all. So that's just 3 trades inside of this sessions that we're actually looking at. So now what do we want to do? We want to now watch what the New York session does. So London, the London low. Actually, wait, let's go on to the 30-minute for that. So the London low is almost immediately. So, because we had news, what day was this? Wednesday the 7th. I can't remember what news we had. Was that PMI? I think that might have been PMI. Yeah, 7th. Was it PMI? What time was? Oh, I keep clicking on the wrong broker. 3 o'clock. Okay. So news took a massive effect on the market, dumped price, taking out, you can't count this as an equal low, but you can say that there is a high volume of liquidity sitting in this area. It's a high probability liquidity area. Price definitely wants to come back into this before being able to move into its next area. So what it does is it takes all of this out, New York, London, Asian, so it takes out, I'll just put this on the chart for it, takes out with this spike, takes out Asia, takes out London, takes out New York, other way around. So yeah, that shows market moving with price, moving with averages, moving with the probability. So what it does now is it actually taps into a demand level of the push from the New York session. So you can see that market is playing off of all of the time frames, all of the time zones. I mean, not time frames, time zones. If it moved off time frames, everyone would know what the fuck's going on. So yeah, what it does is it pushes into it, pushes out, you know, gives us some nice consolidation areas for entry before it pushes up and spikes and takes out that news high. As you can see, gold is literally wicking above these highs, taking out these areas. So let's go down onto the 5 minute and see if we can find any entries inside of this range. So what do we see? We see the push into the demand, very, very nice. What I would look to do here is look for a break. Now I quite like this one because we can definitely control our risk on this. We can put our stop at the bottom of the demand, and this is a strong demand, strong demand level, high probability. If you want to, if you did, you could put your take profit here, and yes, you would have been hit. It would have been a absolutely lovely trade. You would have been in absolutely no drawdown. Wait, would you have got drawdown there? No, you would have got no drawdown, and you would have been successful. You could also have reduced your risk even more. No, you could have given it a bit more of a risk by placing it at the low where it tapped into the demand, and that would have given you a 14R on that play, which is a very, very, very nice risk to reward. That's FTMO passing trades. That's one time a month trades. You won't need to be taking any more trades than that, especially if you're risking 1%. And obviously through this you would be taking partials. So you'd be taking partials. If we're in a range, I'd be taking it from the fair value gaps. So you would take it here, first one there. You might take one from equilibrium. I'm not sure, depending on what your strategy says. But mine would say take it from the fair value gaps and take it from areas of confluence. So I'd probably take some at the previous London low, which is basically the fair value. The equilibrium. So yeah. So what we're looking at now is smaller time frame entries. So we can see that there's from the Asian session, we've had a little bit of a range. We would have still been in our big trade. You can watch it. So it actually creates a low. Previous. It creates a low, which is a nice low. Also has the high. The high was broken. Normally you would look to short from if a high is broken, but because we're inside of a bullish trend, I would not look to short. I would just look to have these levels marked out onto my charts just for further trades. So yeah, so what happens here is we have the London open area. I always do this, especially if I already have a trade in, because I look to get more partials in. So unfortunately it didn't tap here. We're a couple points off, which is unfortunate. But then of course with New York, we rallied up, took out the liquidity, and are now ranging inside of the Asian session. And what we're looking for now is London, which actually took out the Asia lows. This is a demand level that we have marked out onto our charts for movement with price. We also have the Asia high here, which could get tapped into and then retrace. So what we might look for is for price to come back up here, fall a bit, maybe retrace back up, fall down, give us a break, and then we enter. Stops at Asian high and maybe at the low. We will see. We will see what the market gives us and what she's saying. I will do this. I'll have a live trade. I'll record it when there's more market movement and when New York session starts. So we will wait for that. So yeah, that's my analysis of gold over the past days, over the past week. Hopefully gold does more lovely setups like this. So we would have got 1, 2, 3, 4. You'd have had 4 setups which you could have taken according to my trading plan. So we are definitely looking to get another trade in today. Well, it's Friday, so I'm not too sure if I'll trade, but I'll definitely watch it and definitely record it, because that's how you experience more in the trading markets and get better. So hopefully you enjoyed this video. Hopefully you got something out of it. See a little bit into the market and how I look at it. And yeah, I'll catch you in a bit.